Hello and welcome to IVCA Conclave 2017. I have with me today Mr. Paddy Sinha from Tata Opportunities Fund, and he's also the Vice Chair of IVCA. Thank you for speaking to us, sir.
It's a pleasure.
What is the objective behind the IVCA annual conference this time?
So the IVCA, as you know, is the largest member-based representative body for the private equity and venture capital community in India. It's a growing organization. The member engagement has been very vibrant. The Conclave is, of course, the flagship conference, but in addition, there are lots of meetings, ideation between members, engagement with the government on creating appropriate regulatory framework, which is consistent with the government's own objective of increasing the flow of capital into companies into India. So the Conclave is an annual event, and this year, given the alternative AIF, Alternative Investment Fund policies are more or less in place now, we have appropriately labeled it so. And this is also a platform where we get to engage with some of the key government ministers and bureaucrats and regulators. Of course, we do that on an ongoing basis, but the annual conclave is a flagship event for doing that.
Right. What kind of opportunities do you see for private equity in India going forward?
I think this is, as was discussed earlier in the conclave today, the growth has been now steady in the last few years in private equity and venture capital, of course with some blips here and there. But generally we are seeing investments of about close to $10 billion annually. I'm excluding real estate and infrastructure for this. And we expect that to grow because as a percentage of GDP, that number is low. So as I think the minister also spoke and some of the other speakers mentioned, the investable universe is growing as newer opportunities are coming up in India. And some of the traditional sectors also becoming more viable to invest into. I think the Indian economy is obviously on a good footing today, growing at close to 7% in the context of global growth, which is anemic. And India is probably the fastest growing major economy in the world, and it's likely to remain so. At the same time, the Indian economy needs a lot of investments, and some of it has to be met through our asset class, which has been a consistent provider of capital. So I think, you know, there is going to be significant investment opportunities in the future. And our, as an industry association, we try to channelize sources of capital. We are keen on the promotion of a local LP, limited partner base, which invests into funds, because it's important that the local industry also grows and also provide the right sort of competitive environment for global investors to come into India-focused funds and not just come in offshore locations like Singapore and Mauritius, but come in through AIF structures as well, which will create more managers and more economic activity in India as a consequence.
You mentioned infrastructure. Minister Sinha also mentioned infrastructure, ports and waterways also being exciting space. But if we look at other sectors, which you briefly mentioned, if you can specifically say, so which sectors do you think will attract more PE activity?
So traditionally, of course, financial services, consumer, discretionary and technology have been sectors which have got more private equity and venture capital investments in India, healthcare as well. I think this base is now broadening a bit. As I mentioned in one of the panels, to pick an example, manufacturing is a sector where I think we will see more investments. You know, we picked up an example of the automobile industry, where 20 million units of vehicles are sold in India, roughly, which makes it a very large market. And you know, India is not just a big market, but also a competitive base for exports for, say, small cars within that. So I think, you know, again, some funds don't invest into infrastructure, but would invest into feeder services into infrastructure, like engineering, construction companies, service companies. So there are a whole bunch of opportunities. Of course, the whole digital disruption creates new opportunities, and as more tech-enabled modern businesses come up. So I think there's a wide array of opportunities. Again, I think, just touching upon subject of contemporary relevance, demonetization. I think long term it is good for the private equity venture capital community because it brings more things into the formal sector, which, obviously PEVC community will not invest into the informal sector. So it brings more companies into the formal base. They're tax compliant, transparently run, become transparently run companies, which is important.
Short-term heartburn?
Yes, but it looks like the transition pains have been less than some people believed so. So if you see the provisional GDP numbers, I think that indicates that the transient pain was also perhaps less than some people had anticipated. But I think long term, it creates a more vibrant industry for us to invest into, and also removes any sort of tax arbitrages that are there. So a tax-paying company will have a level playing field with a company which doesn't declare or pay its taxes, which is important to have. So what institutional investors need is a predictable, a consistent regulatory framework, which then allows companies to compete on the quality of the management teams, the strategy, and their execution, rather than regulatory factors.
You mentioned an impetus to manufacturing. So my last question to you: good news for Make in India initiative, which has gone a little limp in the last few months.
Yes, I think I think it's critical because, as we all know, I think the one area where the Indian economy really needs to focus is job creation, with so-called demographic dividend that India needs to leverage. We need to create 10 million jobs a year, which is quite challenging in the global context today with a global slowdown and a lot of automation creating job redundancies. So I think Make in India is critical in that context, because unless we broaden the base of industries in India, that sort of job creation will not happen. So I believe, yes, I mean, more can be done, obviously, but I think steps are being taken in that direction.
All right. Thank you so much for speaking to us.
Thank you. It was a pleasure.